Hey, friends. How are you feeling today? I want to make sure you can hear me because, man, we got great stuff to talk about today. Go ahead and hit that Q&A box. And if you can hear me, type ho, ho, ho. All right, Vincent. Thank you. Justin, David, Michelle, Mabel, James. All right. Tomas and Dirk. Gosh, we got everybody. Joe Y, or we could say Joy, make it part of the holiday, part of the holiday season. JD, Johnny, and Jody. All right, friends, good. Well, here's what we're talking about today. We're talking about the top strategies for the rest of 2025. Ooh, I almost said 26. Into 2026. I'm getting ahead of myself, probably because it was just 2024 last week. Doesn't it feel that way? Like, how did it even happen that it's the end of 2025 right now? That's crazy. That makes no sense at all. I can't even fathom it. But nonetheless, we're here. So let's make the most out of it. Before we get started, I need to point out that options are not for everyone. You should read characteristics and risks of standardized options before trading. Get a copy of that by emailing investor services at theocc.com. And don't trade with money you're not prepared to lose. Everything we're doing here is providing generalized information, not necessarily specific to your situation. You're here to learn, not to be told what to do. Because knowledge is power. That's what you want. Now, for those of you who, geez, I mean, most of the folks here are old friends and MTM family members, but I did see a couple of new faces here, which I'm excited about. I love to make new friends. So allow me to introduce myself. My name is Dan Passarelli, and I am an author of two of the most popular option trading books. That's Trading Option Greeks is the one that I'm most known for, and The Market Taker's Edge. Also, the third one just got the copy edits back. Going to take a look at that, sometime between now and New Year's Day. That one's going to be coming out in April of 2026. And I author a lot of other things too. My Substack, my podcast. I've got lots and lots of content that I put out for you. And just yesterday, someone who works with us here at Market Taker says, Dan, why do you just like work so hard and create all this free content for people? And I said, that's a darn good question, but I don't know. I do it. And I'll probably continue to do it. I'm also a trader and an investor. Been doing both of those things for a long, long, long time. I'm the founder of Market Taker Mentoring, which is the global leader in option trader education. We have students in over 50 countries, believe it or not. We've put tens of thousands of students through our class. And I am a trading industry collaborator. I work with all the good actors in the options world, like Firstrade, for example. All these options friendly brokerage firms. Firstrade brings you so many great things, doesn't it? Brings you these free trainings. That's pretty amazing. I also work with a lot of the exchanges and software people and, just thought leaders, I guess. And outside of trading, I'm a family man. My wife, Kathleen, many of you know, she runs operations here with Market Taker. Got my two little tiny dogs, which are always sleeping during this. except for when you hear them barking every now and then. And my 2 kids. And then finally do other things for fun. I like to run, bike. Just got a rowing machine. Still trying to figure out the rowing machine. I don't know. I need some tips. I need some tips on it. Foodie and traveler, been all over the world with my family or with John, who works with me here at Market Taker, a music person. These are all the things I do for fun. But enough about me. Who cares about me? Let's talk about you. So first of all, I want you to get a lot out of our session today. So go to markettaker.com, 2 T's in a row. Market as in stock market, taker as in take what is rightfully yours, markettaker.com, and just go up to the top right and click on join free. And you'll get lots of other free classes and other things. One last thing to help you further yourself going into 2026. Listen to podcasts. I just saw a stat. Over 50% of Americans have listened to a podcast within the last 12 months. It's a common thing. A lot of people do it. It's like having somebody tell you a story. But this story can help you build wealth with options. That's why I call it wealth building with options. You'll learn to master covered calls and cash secured puts. It's great for wheel investors of all experience levels, beginner, intermediate, advanced. You'll learn adjustments, the mindset needed for covered calls and cash secured puts, strike selection, analysis techniques, and so much more. There are new episodes weekly. They drop every Tuesday morning. Every Tuesday morning. Right now is Tuesday morning for 3 of the time zones in the US. So it just dropped like an hour or 2 ago, something like that. Hit the Q&A box. Type podcast if you got my podcast this morning when it came out. Anybody? I'd be really happy. Spent a lot of time putting those things together. I hope somebody's listening. I know people are listening. I can see the stats. All right. Well, new episodes weekly. And, one of the great things is it's another thing that is free. And yeah, I put hours and hours into each episode. So you should check it out. markettaker.com/ApplePod if you want to listen to it on Apple Podcasts, or markettaker.com/Spotify Pod if you want to listen to it on Spotify. And if you want to listen to it on something else, just go and search for Wealth Building with Options. Now let's talk about the rest of the year. Ho, ho, ho. Santa Claus rally is coming to town, maybe. Might be coming. What is the Santa Claus rally? Well, as defined by the Stock Traders Almanac, and Yale Hirsch, who's the guy who created the Stock Traders Almanac. I am friends with his son, Jeff, who's one of the nicest guys you'll ever meet in your entire life. He now runs the Stock Traders Almanac and compiles it yearly. But his dad, Yale, created it in 1972 and identified the Santa Claus rally. The Santa Claus rally is an observation that the last 5 trading days of the year and the first 2 trading days of the new year, we tend to see gains. We tend to see outsized gains. Not like 50% or something, but a couple percent. It gives us an edge. Some people will call this the December effect. I like to call it the Santa Claus rally because it's kind of a fun and festive way to describe it. It's sometimes confused with the January effect or the January barometer, but let's talk about the Santa Claus rally here. Why why is it a thing? Why is it a thing? Well, here's why. There's a couple of reasons that I can see. Possibly finally or possible final buying after other traders sell for tax reasons, scooping up real discounted stocks. So like if there's a stock that you own that is down on the year, talk to your accountant about this, but some people will sell those stocks because it might be for their situation a tax write-off. I don't give tax advice. That's why I'm, being very cautious in what I say because I don't like giving bad information and I'm not an expert in that. I have my accountant do it. But, what I'm saying is a commonly known thing here, right? Selling losers to harvest a tax loss. And that's been going on in December. We see a lot of people doing that. And some of the big firms will do it. They'll do it earlier because if somebody's got like 50 million shares to dump or something like that, if they just say, oh, 50 million shares, sell them at the market, like they're going to smush the stock. All the bids are going to disappear and the stock's going to go down a ton. So they got to kind of sneak it in there. They got to do a little bit here, a little bit there, and it might take them a few weeks. By now, yeah, a lot of them are probably done with their selling. And so all that selling pressure has pushed some stocks down. But if they're actually good stock, and what they probably want to do is sell them and then wait and then at some point buy them back when it makes sense for them, whether it makes sense in a tax wise or just market trading wise. So, some of the prices are depressed on stocks that are actually fundamentally pretty good. It could be potentially a good time to scoop up some deals. And so the smart folks who look for those deals, they start buying those stocks now that they got sold. And that can push the price of those stocks up. And if there's a lot of that going on, push the market up. Also, in anticipation for the January effect. What is the January effect? Well, it's just an observation that the market tends to go up in January. And so some people like to just get in early before everybody else does, which can make sense. Another reason for this so-called Santa Claus rally is, hey, traders are in good moods. I think I'll buy some stock. I'm in such a good mood. I'm going to buy some stock. You guys ever do that? You just feel like you're in a good mood and so you buy stock? I don't know. You probably don't want to do that. You want to use the prefrontal cortex a little bit more than that, right? Also, this is the time of year when some folks get bonuses. Bonuses. I love bonuses. When I get a bonus, what do I do with it? Spend it. Take the wife out to the fanciest steakhouse in town, get the finest bottle of wine. Sometimes I do that. But we like to sock it away a little bit, right? Be smart about it. Money compounds over time. I'll take at least some of that bonus and buy some stocks, buy some shares of spiders with it or something. Invest that bonus money. And when there's a lot of that going on, which there probably is right about now, that can drive the market higher too. These are all the reasons for that. Now, how much higher? I don't think I adjusted this in a couple of years here. So I think the last time I adjusted this was in 2020. I'll have to double check it or chat GPT it. But about 2/3 of the time, the Santa Claus rally has worked. I think there was a year recently when it didn't work, but 2/3 of the time it does. And since 1950, the S&P 500 averaged 1.3% gains in the last 5 days of the year and the first 2 days of the next year. I mean, hey, man, that's not guaranteed. It only works 2/3 of the time. But I mean, if you knew for certain, which you don't, I don't, nobody does. But if you had a crystal ball and you knew for certain the market was going to go up 1.3% in this 7 trading day period, I mean, I would get as much money as I can get my hands on and buy as much of the market as I could, right? I mean, you make 1.3% on $1,000. Okay, fine. You make 1.3% on $1 million. Okay, now we're doing something here, right? December is the 3rd best month for the S&P 500. December has posted 1.39% gains on average. What's the best month? April. Why? Because it's my birthday month. The second best month, November. Why? I don't know. Probably because most crashes happen in October. I don't know. September is typically the worst month for stocks. It's all designed. I was just talking with a guy I know this morning who runs Facebook ads. I run some Facebook ads. I'm trying to introduce people to market takers, so I throw up some Facebook ads. And he wants to get into trading. And I said, it's all about edge. It's all about just having some statistical advantage. It's never about some sort of guarantee or anything like that. It's just if you can have an advantage statistically on trades, well, that means if you make enough trades, you should make money, right? So that's what it's all about, friends. Statistical advantage. Edge. Now, big traders get bonuses. That's how traders are paid. When I was a professional trader, you know what my salary was? I was making $30,000 a year. But I didn't care about the salary. That was just like enough for CTA fare, bus fare, not bus. I seldom took the bus, That was enough to pay for taking the L and some beer money. The real money comes from bonuses. And I used to get bonuses quarterly. I think that's a common thing. But the big thing is the end of year bonuses. Big traders' bonuses are largely based on the end of year numbers. They work all darn year for probably a pretty small salary just to get this one gigantic truckload of money at the end of the year. Isn't that crazy? And it's based on how much they make during the year. And sure, you make some in January, make some in February, make some in March. But you really want to maximize that end of year number when a 6-figure bonus might be the result of it. So you know what some of them do? They do this thing where, like, if the market is, on an option, maybe there's a trader who has option positions in 100 different options. Some are long, some are short, some are spread, some are not. Maybe all of them are hedged, maybe none of them are hedged, maybe some of them are hedged. But if they look at one of their option positions, maybe they're long 1,000 of these, whatever they are. Well, that option has a bid-ask spread. And if they have 1,000 of them, well, every penny of option premium is worth how much? How much is 1 penny of option premium worth? Can anybody tell me? One penny of option premium? $1 of money, right? That's per contract. So if I have 1,000 of those contracts, that's $1,000. What if the bid ask spread for this option that I own 1,000 contracts on? What if it's like $1.20 bid at $1.50? It's one of these wide market ones. What if, and they mark to market the trade at the mid-market value, right? So if it's $1.20 bid at $1.50, what's in the middle of that? 135, right? Well, what if I put in a bid to buy at 125? Now, in the market, if nobody wanted to sell it at 120 because the offer is 150, probably nobody's going to sell it at 125. So these big traders might put a 125 bid in, knowing full well they're not going to get filled. And they'll do this right at the end of the day, mind you. Knowing full well they're not going to get filled. But now, instead of $1.35 being what their bonus is based on for that option, now it's $1.37.5 between 125 and 150 instead of 120 and 150. They magically made 2.5 cents of option premium per contract times 1,000. Magically, they have $2,500 of extra profit just because they put in this one seemingly benign little bid that nobody's ever going to see for a trade. Makes a big difference. And on top of that, they might be doing some tricks the other way too. Big traders' taxes are based on end of year numbers. For taxes, the object is to show the smallest profit within the legal constraints of the law. So maybe they're long 1,000 of these and they want to lower their tax benefit and they cheat a little bit and put in a 145 offer. Well, now all of a sudden I'm $2,500 less profit that I have to pay taxes on. Your effective tax rates is like, the 25% effective tax rate. I mean, you just saved yourself, I don't know, not quite $1,000, but real money, right? I don't know if people do this. I have heard of people doing this. Little traders like me or you can't do this, but maybe big traders do. You never know. Money managers also need to show investors that they're in the right investments on their end of year statement. So if you hire somebody to manage your money and you see, oh, this guy is in WXYZ stock, and you look at a chart of WXYZ stock and it's like down, 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 down below the 200-day moving average, you're going to say, hey, man, why are we in WXYZ stock? I'm paying you to manage my money and you're in this crappy stock. Now, he might say, you know what? I ran the numbers and it's an excellent value stock. And I know it's down, but, I'm going against the market. I'd actually like to buy some more here. And for a rational person, that rational person might say, okay, I understand. But humans are not rational animals. And so what they're going to say to the money manager is, why on earth? What? That's dumb. This is a loser. This is a losing stock. Why are you in this stock? And so what they do, some of the money managers, or fund managers is they'll sell the ones that look like crap on the chart so that at the end of the year, when the prospectus comes out, people aren't saying, why is this guy in this lousy stock? Well, he's not in the lousy stock. That's what the prospectus says. He sold it before the before the end of the year. And so there's a little bit more incentive for traders to buy the strong stocks and sell the dogs, the weak stocks. All right. How about bonuses and wiggle room and limits? So big traders, like here's this big, crazy conspiracy theory. There are people, and I'm going to guess there's people here. There are people who think that the big traders can just wave a magic wand and make stocks go up or down. It's just literally not true. Big traders can't just make a stock go up or down. If they could, they wouldn't be billionaires. They'd be, I don't know, more than trillionaires even. What comes after trillionaires? Quadrillionaires? Quintuplaires? Sextuplaires? Septuplaires? Octuplaires? I know Google ends up being one of those really big numbers. But if you could just make a stock do whatever you want, I mean, you'd have unlimited money. You would win the game. So, I mean, they really can't. Can they possibly nudge prices a little bit? Yeah, maybe. Yeah, of course, right? Creating supply, creating demand, buying a lot, it's going to push the stock price up some. Can't make it go up, as much as they want. And in doing so, they're taking on extra risk. So these things about, do some traders potentially, and maybe that's kind of conspiracy theory-ish too, but can some traders just go in and throw in an extra bid or an extra offer here to nudge the price a little bit? It's definitely possible, but they can't make it whatever they want. And by the way, also, friends, as I go through this end of year and into the new year stuff, this class today, I would be really happy to open up to Q&A. So if you have some questions on, things we can talk about expectations for next year, whatever, hit that Q&A box. Big traders tax trading. Oh yeah. So if big traders were to, do any of the things that I'm talking about here, or speculating about is really what I should say. Selling stocks because they want to harvest a tax loss or something. Like, I don't know that. I don't know that there's some trader at some fund at one of the big houses, Goldman or JP Morgan or Citigroup, is going to sell 100 million shares of something. I don't know that. How could I know that? I would have to know the trader, and that trader would have to tell me that, and I would have to believe the trader. And the trader would never tell anybody that, because then somebody could front run him and he's not going to get as good a price as he wants. So nobody knows what the big traders are going to do or are doing or will do. But we can read order flow. We can look at time and sales. If we're talking about options, we can look at volume, open interest, and we can see, hey, look, a big, huge trade happened in WXYZ stock. You see that big block trade that went up? Oh, okay. So we can't really learn about it until after the fact, after it becomes public information and everybody can see it. David, I have a question off your topic. If I was long a put and it went way into the money with a large profit, all intrinsic value, when I got the first part of the question. I know I do this. We have a new system in place, a new CMS, customer management system. And I'll text some of our customers from there sometimes. And I'm texting on the computer, and I'll text like David, and I'll hit enter to go to the next line, but it doesn't go to the next line. It sends the text, and it's like, oh crap. I just sent this person a text, and all it says is their name. It's kind of weird. Looks like that's what you did here, David. I don't see the rest of your question. So I shall wait. In the meantime, end of year window dressing. So it is tough, but not impossible to know what the big boys will do. Big boys and girls. We can never know, but we can take data and make educated assumptions. Based on everything we just talked about, one of the things we know is that the strong stocks are likely to be stronger going into the new year for all the reasons I talked about. The weak stocks are likely to get weaker going into the new year for all the reasons I talked about. So, this is like a very different way of thinking about it. This is a very specific set of data to be making decisions on. It's technically like fundamental information based off technical analysis. That's weird. Like, Dan, how do you get fundamental data based off technicals? Well, because if we know that the strong stocks are likely to get bought and bid up and continue to go up, and the weak stocks are likely to get sold and get softer and weaker and more likely to go down, we can infer real supply and demand from just looking at a chart, which is kind of weird, right? But that's kind of what we're talking about here. All right, back to David. If I went to sell, okay, so he said, if I was long a put and it went way into the money with a large profit, all intrinsic value, if I went to sell the option, would I be able to get a bid quote, or would I essentially be forced to exercise? Do you have a very specific situation? Yeah, I can pull up, the Firstrade account and just take a look. But I mean, the answer is there's a bid and an offer for that option. So if you own it, you can sell it on the bid. Maybe you're asking that because of the phenomenon that very deep in the money options tend to have very wide bid ask spreads. And so you might be forced to sell it under parity, which is like sacrilege, a terrible idea. But sometimes you can't even sell it at parity, in which case you're better off exercising. But I don't know. If you got a very specific example, David, let's pull it up. All right. So anyway, end of year window dressing. Strong, likely to get stronger for the next few days. Weak, likely to get weaker for the next few days. But the problem is, you don't know any trader's position except your own, unless unless you know a trader who's maybe like your friend, your kid, your dad, your wife, your husband, whatever. Nothing else. All right, David. Unless you can literally see what is in someone's account, you just don't know. I don't know what any of the big traders have. Now I can look at things like 13F statements, which is, big traders need to declare. There's some uh, rules where big traders have to declare some of their holdings, but those aren't the most up to date figures, and they've only got to declare certain things. You get some information from the 13Fs, but it's limited. So we don't really know what traders' positions are. So I don't know if there's a potential for anything getting nudged away. I don't know if, hey, this stock is strong, but is it all retail people? If it's not held by a lot of institutions, then maybe that follow through that I was just talking about won't happen. If you can react and adjust positions effectively, you can take advantage of opportunities. But you basically have to look for what we call unusual activity or whales. And when you see some of those big blocks go up, then you can infer information. But, you've got to have the right tools for that. You probably have to pay extra money for that. All right. So let's talk about now strategies most likely to work in 2026. And I want to chat about that. I've got my thoughts and I'm going to share my thoughts with you, but I think it would be fun to open this up and in one sentence, tell me what strategies you think are most likely to work in 2026. Is it a bull call spread on Tesla? Is it a straddle on the S&P 500? Is it an iron condor on the S&P 500? What could it be? I want everybody to hit that Q&A box and in one sentence, don't type a big old, thesis on this, okay? Just give me one sentence or as few words as possible. What strategies do you think are most likely to work in 2026? Type that in now, and I'm going to share mine too, but I don't want to start. I don't want to influence your thoughts. And because I'm the class leader here, if I say my thoughts, a lot of people might be like, "Oh yeah, I think that too." I want to hear what you have to say first. So, Lita says a Google call leaps. Interesting. I can see that, Lita. I mean, Google is getting into this, AI chip game. They're, they're established in a gazillion ways already. I like that. I like that. Google call leaps. Kengo says short individual stocks. Mm-hmm. Got to tell us which ones. I'm sure you don't mean all stocks, or maybe you do mean all stocks. There's probably some that you're bullish on, though, right? Interesting, though. I like it. I like your thoughts. Douglas says bull put spreads on the rut will work well. in 2026. Interesting, interesting, interesting. Yeah. Okay. How about Mike here? Sell it for more than you bought it for. That's just crazy enough to work. I'm going to start doing that in 2026. Or wait a minute. What about buying it for less than you sold it for? Ooh. Had to throw in the options uh, thing there, you know? Buy low, sell high, buy low. All right. David, long on mid cap stocks and short on tech AI stocks due to a rotation and fad. I'm kind of adding words here. I don't know why I'm adding words here, but so David is asserting that AI is just a fad. David, did you read my last two Substack posts? I did a two-part series on my thoughts on AI stocks. The Substack is Wealth Building with Options. Wealth Building with Options. And it's for paid subscribers, those two articles, but you probably get at least one of them free, I think. I don't know. I think there might be some sort of trial. See what you find there. But yeah, I did a whole two-part write-up on AI stocks. I bet you'll find it interesting. Manish. Hey, man, how's it going? Says call spreads on IWN based on lower interest rates going in favor of small caps. Very interesting. So you're talking bull call spreads, I think, right? Bull call spreads. Interesting, interesting, interesting. Now, those lower rates, they help growth stocks in general, which would be small caps, but also some of the tech stocks too. Because that's one of the things that I wrote about AI stocks is that a lot of them, not the Googles and the Microsofts as much, but the smaller stocks, they're borrowing massive amounts of money. The companies that are in AI are borrowing, I think, what did I read? In 2026, I think they're set to borrow more than their cash flow. So it's a big, 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 big investment. They need low interest rates to make that work. But yeah, IWM, the smaller cap stocks. I like that. Gene is bullish on Teva in the farm sector. Pharma. All right. Teva, of course, makes a lot of generic drugs, if I'm not mistaken, right? Interesting. Yeah, I wonder, there's a lot of talk about just healthcare in general. Will this marketplace discount or whatever be extended? And Trump has been talking about trying to get lower prices on drugs. And I wonder if that would help stocks like Teva. I hadn't really put much thought into it, but Gene, I like where you're going with that. Worthy of doing some research for sure. Mahesh says short Tesla. One day it will work. That's right. One day it will work. David. Oh, back to AI. I don't think it's a fad, but I think rotation is a thing for money managers now. Yeah, man, that's interesting. That makes a lot of sense. That makes a lot of sense. Because, you can't just you got to take profits at some point, right? And those are not the only stocks out there. And we've been seeing some of the stocks that were like not as in favor in 2025 picking up a little bit. Yeah, I've been noticing that rotation as well. Lita, buy orbital data center related stocks or options. Okay. That is not something on my radar. Interesting. Buy orbital data center related stocks or options. Interesting. Thanks for bringing that to the table here. Oh, that Trump is going to bring drug prices down 400%. Yeah, I mean, there was a shot over the bow already on that. Was that was that this week or last week? I think it was last week, right? Where there were a list of pharmaceutical companies, and the deal was Trump wants them to sell their drugs in the US at the same prices they sell to other developed economies, like in Europe or whatever. Novel idea. Have the same price for all customers. That is a novel idea, isn't it? It'd be like me saying, "Oh, you want one-on-one coaching? Well, you pay $100 and you pay $50,000." So, yeah, interesting. So, yeah, well, I hope drug prices do go down. I hope our healthcare system uh, gets some changes and is better for everybody. Tomas, what about to be short put on SPY? I mean, that sure worked pretty well in 2025, didn't it? I was short puts now and then on SPY during 2025. And, realistically, I mean, I was just a guest on a podcast last Friday night. It just dropped yesterday. I do a lot of podcasts. Did you notice that? I've got my own podcast, Wealth Building with Options. I'm on the Options Bootcamp podcast as a co-host. And then I'm a guest on other people's podcasts, like easily twice a month. I do, gosh, man, I probably do more podcasts than anybody I know. But I was talking about that 2026. And I'm figuring it's more likely than not that it continues to be a good year unless we get a catalyst, which is not out of the realm of possibilities. I mean, AI, there's a lot of things going on with AI, like their accounting, all the big companies, like all of them, Google, Microsoft, they are amortizing their chips with a longer useful life. A while ago, they used to amortize their chips for accounting, because it's CapEx. It's a capital expenditure when they buy hardware like that. And so that means it goes on their books as an asset, and then they amortize it over time. And it used to be about 3 years, 4 years, but now they've been amortizing them for 5 years or 6 years. But the problem is, if you look at NVIDIA's chips, well, they've got the Blackwell chip right now. But next year, they're going to have a whole brand new one, the Vera something or other chip. And then in 2027, they're going to have the Vera whatever Ultra chip. So there's a new generation that comes out every year that's way better than the one last year that requires different, power needs and cooling needs. And so the useful life of these chips is arguably getting shorter. I mean, I'm sure some companies will run the old inefficient chips and not just buy new chips every year. But I mean, you're not going to run a chip that's 6 years old when you get massively better ones every year, right? So, I mean, the useful life of chips has gotten way shorter, a year, two, three, maybe. But on the books, they pretend that they last 5 or 6 years while they're borrowing money. So there are some definite potentials for catalysts when it comes to the AI thing. I mean, AI is a thing. Who was I talking to? David. It's not a fad, right? Like AI, I don't know what it's going to be 5 years from now, but our society is going to change as a result of it. But that happened during the dot coms too, didn't it? In 2000, 2001, a bunch of companies went bankrupt. The bubble burst. Took 2 years and 9 months for the Nasdaq to get back up to where it was. That did mean dot coms and the internet was a fad. It was a real thing, and it did change the world. I don't have to go to the library anymore to get knowledge. I just type it in on my computer and ask it. But still, a bunch of companies went bankrupt. The bubble burst. And some of that was because of accounting, and some of that was because of wild speculation, irrational exuberance, as Alan Greenspan once said. So I don't know. I mean, I think it's likely that the market continues higher, especially as next year interest rates are likely to go lower, very likely to go lower. um, but I mean, hey, as well as I do, I don't have a crystal ball. I can't predict the future. I don't know. This is just what I think. So short puts on spiders, Tomas, could probably work if this market continues. I mean, they will work if this market continues higher. Anonymous secret agent man says long health sector, as well as Amazon and SPGI. Okay. That kind of makes sense. I mean, aging population. A lot of people don't fully take that into account to its maximum. People across the world stopped having so many kids. That means the average age is getting older. The baby boomers, they're all in hospitals and, care facilities. And that is not going away. That demand is fixed. You look at some healthcare stocks though, and you end up scratching your head like, geez, I wish in my business there was just a fixed number of people that absolutely had to come to me. There's not. It's just folks like you who have a thirst for knowledge. But everybody's getting older. But yeah, you look at some of these healthcare stocks, and some of them, you're like, geez, how come it's down? Doesn't make any sense. I don't know. All right. Thank you, Secret Agent Man. Joy. I'm going to say Joy. J-O. Joe Y. Joy. Buy Bitcoin when it reaches 50,000. Ooh, okay. Okay. Interesting. Interesting. Crypto is not dead. It is alive and joyful. Lita says buy 1 year QQQ call and puts. So buy a straddle in QQQ. Wow, that's interesting. I'm going to take a look at that. I am going to take a look at that. Because, all the things that I just talked about, I mean, it's probably less likely that the Qs are just boring next year. Probably lower interest rates and continued AI would push it a lot higher, or that bubble bursts and it goes a lot lower. Very interesting, Lita. And one more. Google, Microsoft, Amazon are the eventual winners. The eventual winners that you know that you. After AI burst, just like in the internet bubble, yeah, I have been thinking along those lines myself. Yep. All the little ones who are getting all debt laden, bye bye. David says, I want to go short QQQ and long IWM. Yeah, okay. That's that rotation you were talking about. Okay. Yeah, we've been seeing that trend a little bit. Lita, 2006 is the high volatility year. Yeah, I think you're right. I do think you're right on that. I think we're going to continue to see, continue to see volatility. This year saw its fair share. Saw a ton in April, but implied volatility, the VIX, where's the VIX now? It's still above 16. I forget if I even looked at the VIX this morning. I usually do every morning, but yeah, I wouldn't be surprised if we have several days above 20 in the VIX next year. Interesting. All right, I peppered in. It's below 14 today. Oh my god, really? Well, why? It's probably because we have the Christmas, right? Tomorrow, market closes at 1 Eastern time because it's Christmas Eve. The next day, market is closed because it is Christmas Day. And then the market's open that Friday. And then you got New Year's and such. So 30-day options, there are fewer trading days, fewer full trading days than in a typical 30-day period. And when that happens, traders sell options to take the day out early, and that makes the VIX look lower. Just one of those little nuances I like to point out to people now and then. So interesting. So yeah, I guess I'm not surprised that VIX is below 14. Because I would argue that even though it says it's below 14, it's really not, because it's really just traders taking the day out. But man, you guys have done some good collective thinking here. I think we all got some really great ideas. Okay, yeah. So I peppered in my thoughts. What else am I forgetting? Yeah, if you want to really, I spent a few to several hours on that 2-part series on my Substack. It's the result of a lot of research. And I always try to write in such a way where it's easy to read. Just like anybody can understand it. It's not like reading a professor's writing or anything like that. I'm not a professor. That's probably why. I like to write for the common man or woman. So let's see. So yeah, if you're curious about the AI bubble, do that. Wealth building with options. What else? Yeah, I don't know. That's it. It'll be interesting to see what happens with this Warner Brother Discovery deal. Do they stick with Netflix or do they go with Paramount ByteDance? It's a much higher offer from Paramount ByteDance. Not ByteDance, Skydance, Paramount Skydance. All right. Well, that's all I have for you today, friends. Thanks for sharing your thoughts, and thanks for showing up for me, because I like to see you every week, and showing up for you because you like to get smarter every week. So that being said, next week you're going to stay dumb because we don't have a class next week. What a bummer, huh? But that's okay, because we're kicking it off in 2026 on Tuesday, January 6th, Mastering Advanced Time Spreads, Diagonals, Double Diagonals, and Double Calendars. That, friends, is going to be a great one. So have a great rest of your day. I'll see you in 2 weeks. Trade smart.